Welcome back to another episode. Today we're going to take a closer look at a semiconductor giant, Intel. The stock right now is sitting at $30, and year to date the stock is down roughly 36%. This is one of the few semiconductor companies that is dealing in the data center market that is down on a year to date basis. So what I want to do in today's episode is the company recently had a keynote at the Computex event where they showcased a lot of new products. And a few days after that, they presented at a conference as well. So we're going to take a closer look at the conference and what investors should know with recent updates. Finally, we're going to end this episode with a closer look at valuations and my overall thoughts. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So the event that we're going to take a closer look at today happened on June 4th of 2024, a few days ago, and this was for the Bank of America Securities 2024 Global Technology Conference. And like I mentioned, we are going to hear a lot of great information in today's episode, especially since this conference was after the Computex keynote. So the first topic they talked about was their foundry capital expenditure. More importantly, a recently announced semiconductor co-investment program known as SCIP. So their SCIP program is part of their smart capital strategy, trying to be smart about their capital, especially as they're building into this huge foundry market. And the foundry market is one that's very, very expensive. So they joined in a joint venture with a company called Apollo, where Intel is going to remain 51% stakeholder of the Fab 34 in Ireland, and the joint venture company is going to have 49% stake. And in return, that company is going to give Intel $11 billion. So this is a great way for them to continue to invest and push out this foundry expenditure that they're doing and this foundry business that they're trying to expand overall. So we've seen a little bit different kind of smart capital strategies from Intel in the past. In the past, we've seen one where they worked with Brookfield, I believe it's called, where with them they kind of were focusing in the Arizona facility, which is still being built, and it was Brookville, not Brookfield. And this one's a little bit different because the Ireland plant is already mostly built, right? So they're going to use that $11 billion up front, and they're going to take it elsewhere to kind of continue their global footprint. So while I'm not necessarily an Intel bull, I wouldn't consider myself an Intel bear either. But if there is one reason to be very, very bullish in this company, in my opinion, is their foundry endeavors. As this company is getting a lot of investments from governments all over the world, and then they're doing these joint venture strategies like we just saw right now, where they're kind of making sure their balance sheet doesn't burn out, and they can continue to expand into other markets as well. So their foundry business obviously takes some time before we actually see some results and some kind of top line numbers. And if one is willing to wait it out, and if one is bullish and believes that they can do it, I think Intel right now, while it might be dead money, might be an interesting investment if you believe that foundry side is going to be important. Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode. Now we're going to take a closer look at Computex. So Computex is this huge tech show, and during this Computex keynote, we did hear kind of four major announcements for Intel. The first one was their Lunar Lake, which is kind of their PC CPU for the AI PC market, mainly for the laptop. And this Lunar Lake is expected to launch in Q3 of this year. And this is going to bring their NPU of 48 TOPS, which is kind of the performance segment that we look at when looking at AI PCs. So that was the first thing. To me, the PC market obviously can do well for Intel because this is kind of a big market for them. So if they continue to grow here, it can definitely help them both on the top line and bottom line. The other things that they talked about was their data center market. In the data center market, they are going to release their Xeon 6 generation, which is first going to go more on E-cores, and this is going to be Sierra Forest, which is going to be released now in quarter 2. Now in next quarter, quarter 3, they're going to kind of release their performance core version of that, and it's going to be Granite Rapids, and that will be coming out in quarter 3 of this year. Now, outside of that, they also talked about the upcoming AI accelerator, Gaudi 3, which is now in the market, and they believe that this is going to be more than $500 million of revenue from them in Gaudi this year, with most of the revenue coming in the second half of the year. So right now, they're getting great traction from Gaudi, and they believe the momentum is going to continue here in the marketplace. So they release a lot of stuff from CPU for the consumer market, CPU for the data center, and AI accelerator. Obviously, the AI accelerator is a lot weaker than their competitors, AMD, and almost non-existent compared to NVIDIA, but they believe that they can grow in this space, which can obviously fuel their revenue in the long term of things. Now, another thing that has been discussed during this Computex is this AI PC market. And right now, the AI PC market is being run, I want to say, by Qualcomm. And the main reason is being run by Qualcomm is Qualcomm did kind of have a nice NPU from the beginning, which is kind of that chip that deals with a lot of AI workloads, a lot cheaper than kind of a GPU, and it's really meant for kind of power efficiency solutions. And right now, Microsoft and Qualcomm have this kind of 1-year single vendor exclusivity, which is expected to end at the end of this year. But because of that exclusivity, many people, even ARM CEO, believes that in the future they can convert roughly 50% of the PC market into the ARM space. And they wanted to hear, hey, look, what do you guys at Intel take about this competition? And right now we hear from Intel's management that, look, obviously they take competitions very important, but they want to remind everybody that ARM and Windows PC is not necessarily a new dynamic. And it hasn't really changed much since 2011 for that matter. So they don't really see much of a growth in the long term, maybe in the short term, because Microsoft does have that kind of exclusivity with single vendor in the ARM market. They even kind of mentioned that, hey, look, there's a big player out there, Apple, who has had over 25 plus years in the market, and yet they only have about 10% market share. So if Apple, the big giant who owns a lot of consumers, can't really grow in this space, why can Qualcomm and other ARM solutions come out here and take over 50% of the market? So obviously, I kind of agree with that as well, especially since Apple, right, a big player here, has only been able to maintain 10% market share in such a long amount of time. Now, there was another question coming out about NVIDIA Grace. So for those that are not familiar, NVIDIA does have their own CPU platform, which is the Grace ARM platform. And obviously, Intel has a lot of CPU solutions, so they're trying to figure out, hey, is this something that investors should be worried about, as your competitor who's doing amazing in AI accelerators is also designing their own CPU, which can obviously make them kind of, hey, cross-sell and say, hey, look, if you want the best AI kind of model, the best kind of AI performance, it makes sense for you to use our CPUs instead of maybe Intel CPUs instead of AMD CPU. And right now, the way management discusses it, it's that the way the market is right now, it's definitely flowing into accelerated compute, and suppliers have more power than the buyers right now. So they're pretty much saying that from how I'm reading it, that they believe NVIDIA definitely is a performer here in the CPU space because of the way the accelerated market is going. But Intel would argue that in the long term of things, that big hyperscale companies, big cloud server providers are going to want a pool of CPU compute, a pool of GPU compute, a pool of connectivity, a pool of everything else. So it's like, hey, look, right now, while maybe these cloud server providers and hyperscalers are focusing only in one vendor, in the long term, we believe it's going to be like in the past, where they want a variety of flavors to some extent. So I'm not going to lie, this kind of response got me a little bit weak or kind of gave some weak sentiment for me for Intel in the CPU space, based on how management responded. Like I mentioned, there are some reasons to be bullish in Intel, in my opinion, in the future. Number one was that foundry side. Number two is the potential of the AI accelerator. Number three is the growth of the PC refresh cycle, where they can release some pretty cool consumer CPUs. I don't believe the server CPU right now is one where I'm completely bullish on. Obviously, there's opportunity there, but I believe there's more risk and negative side than potential growth in this market. Now, Intel does have kind of like a backup plan. And like I mentioned, that backup plan is the foundry business. And if ARM does become a major player in the PC market, in the server market, Intel did have a partnership about a year ago where they made a joint announcement with ARM and research and development announcements that there's going to be a multi-year co-development announcement where they are going to optimize their latest cores on Intel's 18A. So while maybe Intel might be losing in the CPU space for the server and the consumer side, they will be able to kind of sell their foundry business to the ARM players that are probably taking that market share. So it's pretty interesting how Intel, very similar to TSMC, could have very much competitors and customers that they work with almost on a daily basis. So I do believe the foundry business is the biggest reason to be bullish in Intel, but it doesn't mean that it's risk-free. The foundry business takes a long time. There can be a lot of hiccups on the way. It can take some time before we even see some on the top line, yet alone the bottom line of financial numbers. But overall, if you were to ask me, Jose, what would be one reason where Intel can kind of dominate in forms of returns in the long term of things? I would say not 100%, not even 75% sure, but if there was one segment, it would be the foundry side. And we can see in forms of PE ratio, Intel is pretty cheap. Forward, which is the end of this fiscal year, so about 2 quarters from now, is sitting at 28. PE ratio forward 1 year, which is the next fiscal year, so about a year and a half from now, is 15.53. So like I mentioned, if Intel is able to do really well in their foundry business, if Intel is able to even take breadcrumbs in the AI accelerator market, if Intel's able to grow and kind of go up with this AI PC refresh cycle, and if they're not gonna bleed too much in the data center space, I can definitely see a bullish reason for Intel in the long term of things. Doesn't mean I'm gonna go out there and buy Intel right now, but I definitely would like to hear from you, the viewers, of what are your thoughts. Do you think Intel's completely dead money? Do you think they won't pass in their foundry segment? What about the AI market in general? So thank you guys for today's episode. Take care, have a good day, and see you all next time.